If you're on Social Security and you keep hearing whispers about a $2,000 payment, here's the one detail most people are missing. Stay with me. I've been flooded with messages from viewers who receive benefits of every kind: retirement, disability, survivor, spouse, SSI, VA style programs, you name it. And the questions sound almost identical. When would it arrive? Would your group be counted in? What number is real, direct deposit or paper? So in this video, I'm going to walk you through what's been said, what hasn't been said, and what actually decides eligibility in practice. And near the end, I'll explain the single myth that keeps causing panic in the comments, because it's costing people peace of mind. First, a quick reality check. Politicians can float ideas for weeks or months, and the internet turns every hint into confirmed. That's why I'm careful with wording today. We're talking about an idea that has been discussed publicly, but until legislation is written and funded, nothing is guaranteed. Fair enough? Now, let's start where your questions start. Am I included? If you're receiving any Social Security-related benefit, you're not alone in asking that. But here's the framework you should use instead of the rumor mill. The government doesn't usually sort people by job versus no job. They sort people by income and records. That distinction changes everything. And I know what some of you are thinking right now. Wait, income? I'm not working. But if money hits your account each month from Social Security, that is income. It's not wages, but it's still income. So the question isn't, do you work? It's, where does your annual total land? Here's the comment I see constantly. I don't pay taxes, so they won't send me anything. Let me be blunt. That assumption is usually wrong. Not filing a return doesn't automatically erase you from the system. In many cases, it simply means your income is low enough that filing wasn't required. See the difference? Another comment. They don't know my income. Really? Think about this. Social Security issues yearly statements about what you were paid. Those documents don't vanish into thin air. They are reported. That's how agencies match identities, benefits, and tax information. So the idea that you're invisible is comforting, but it's not accurate. Let's clear it up fast. At the beginning of each year, beneficiaries receive a form showing the prior year's benefits, like an SSA 1099, or a different version for some who live abroad. Those forms aren't just for you. They're also part of the reporting trail. So even if you never touch a tax return, the IRS can still see the benefit amounts. So why does this matter? Because when relief payments happen, the qualifying line almost always comes down to income thresholds, not occupation, not did you pay taxes last week, not did you clock in, thresholds. And that's why so many seniors, SSDI recipients, and SSI recipients were eligible in the past when similar payments went out. Let me use simple numbers. Imagine you receive $1,000 a month in benefits. That's $12,000 a year. Now compare that to a hypothetical cutoff, say $75,000 for an individual or $150,000 for a couple. Is $12,000 below $75,000? Obviously. So the fear that no job means no payment doesn't match how eligibility is typically calculated. But I didn't file, so how would they send it? If your bank information is connected to benefit deposits, that's one pathway. If not, there are other methods. The bigger issue is not whether you filed, it's whether you exist in their databases with a reachable destination. That's what matters. Now, quick disclaimer, I'm not your accountant, attorney, or CPA. I can't see your personal situation, and this isn't tax advice. If you're unsure whether you should file, ask a professional. My job here is to explain the logic of how these programs are normally administered. Okay, next, timing. This is where everyone wants a date. And I get it, waiting is frustrating. But right now, the strongest clues come from politics and economic conditions, not from a deposit calendar. Midterm elections sit in November, and if leaders choose to send money, they often time it for maximum attention. Does that surprise anyone? If a payment were ever scheduled with strategy in mind, an autumn rollout would be the obvious window. October is often mentioned by commentators for that reason. That's not a promise, just a logical guess based on how messaging works when votes are on the line. And before someone says, they'd never be that obvious, come on, these patterns are old. You don't have to be cynical to notice them, you just have to pay attention. So if you hear a random influencer shout tomorrow, treat that like entertainment, not planning. Now let's address another fear I keep seeing. If they do a payment, they'll skip Social Security. Think about that for a second. Who turns out to vote in the largest numbers? Is it teens? Is it people you can't pry off games? Is it 20-somethings who forget election day exists? Or is it seniors and fixed-income households who vote consistently? Exactly. That's why the idea of excluding big voting blocks right before a major election doesn't make much sense. Could there be eligibility rules? Sure, but a blanket no for Social Security recipients would be politically bizarre. The loudest rumor is rarely the truest plan. Now, let's rewind to what we've seen historically. When checks went out in 2020 and 2021, the primary filter was income. Some people missed out because their information wasn't on file or because they didn't claim it later through credits. In fact, the IRS spent years encouraging people to claim money they were still entitled to. Wild, right? So if you're worried, the practical move is not to doom scroll. The practical move is to make sure your mailing address and direct deposit details are current wherever your benefits are managed. Because if a payment happens, the biggest obstacle for many people is simply delivery. Let me also debunk the "I don't pay taxes" panic one more way. Standard deduction rules can mean your taxable income appears as zero even when you receive benefits. That's not you having no income. That's just how the calculation works on paper. The system can still recognize you. Let's slow down and make this super concrete because confusion often comes from fuzzy language. When someone says, "I don't have income," they usually mean "I don't have a paycheck." But the policy world uses income as a bucket: wages, benefits, pensions, interest, and more. So when you hear an analyst talk about income limits, don't translate that as workers only. Translate it as total yearly money coming in. That's the right lens. Here's a quick thought experiment. Two neighbors live on the same street. One works part-time and earns $18,000. The other is retired and receives $18,000 in benefits. If the cutoff is $75,000, do you think one neighbor qualifies and the other doesn't just because one clocked in? That would be a weird rule, wouldn't it? And historically, it hasn't worked that way. Another thing, people assume filing is a ticket to get paid. Sometimes it is, sometimes it isn't. In past relief rounds, many people got money automatically because the IRS already had their information. Others had to use a non-filer tool or later claim a recovery credit. That's why you saw headlines like "billions unclaimed." It wasn't because people were ineligible, it was because paperwork and awareness lagged behind. If you remember those years, you also remember the chaos, updated guidance, and scammers trying to ride the wave. So here's my warning. Whenever big payment rumors trend, fake sign-up pages and phony phone calls pop up too. Don't hand out your social security number because someone promised a shortcut. Real agencies don't charge a fee to unlock a benefit. And if you're thinking, okay, but how do I know what's real? Watch for primary signals: official press releases, bill numbers, and clear eligibility language. If the only source is a screenshot on social media, that's not a source. It's a costume. But here's the twist. Economic pressure can change timelines fast. If consumer spending stalls and recession chatter spikes, lawmakers suddenly have incentive to act sooner. And if they do, agencies lean on existing databases like benefit rolls to move money quickly. So when someone comments, "they'll never include beneficiaries," ask them this: if the goal is speed, why ignore the biggest verified list of recipients with direct deposit already attached? Doesn't that defeat the purpose of stimulus? One more nuance: couples. If thresholds are per person or per household, that can shift expectations. A married couple with combined income could have a higher cutoff than a single filer. That's why you'll often hear two numbers mentioned. And if you're wondering, should I do anything today? Yes. Update your address, guard your info, and ignore anyone selling urgency. The moment a real bill moves, the rules will be publicly written in plain terms, not in rumors. Now, what about the size 2,000? That number gets repeated because it's catchy and simple. But remember, numbers can change during negotiations. Programs can become phased, scaled, or targeted. So treat any single figure as a placeholder until an actual bill becomes law. Here's where it gets interesting. There are multiple reasons leaders might push a relief payment. Elections are one, a slowing economy is another. If economic data keeps weakening, you could see pressure for stimulus-style support earlier than anyone expects. That possibility is why you should watch economic headlines, not just political speeches. Am I saying it will happen? No. Am I guaranteeing it? Absolutely not. Nobody can guarantee future legislation on YouTube, but I can map the forces that typically create these payments: recession fear, consumer slowdown, political incentives, and public pressure. So, what should you do right now? First, keep your expectations grounded. Second, focus on the criteria that usually matter: your income level, your filing history if applicable, and your records in the system. Third, don't let comment sections convince you you're doomed. Most of the time, the commenter is projecting anxiety, not sharing verified policy. Peace is a strategy, not a luxury. Let's zoom in on income thresholds again, because this is the heartbeat of eligibility. If they set lines similar to past rounds, people above certain levels taper out. People below those levels qualify. That's why asking, "Do I have a job?" is the wrong question. Ask, "Is my annual income under the likely cutoff?" And if you're thinking, "My benefits are the only thing I live on," then your annual figure is usually far under typical phase-out ranges. That's why so many fixed income beneficiaries were eligible historically. Now, I want to address a subtle point. Some people don't file because they don't need to. Others don't file because they're overwhelmed or they think it doesn't matter. If a future payment requires a claim through a credit mechanism, not filing could slow you down. So if you're on the edge of filing requirements, it may be worth getting advice that's practical, not scary. Also, if you're hearing the phrase dividend, rebate, or relief payment, understand that labels change while mechanics stay similar. The delivery method and the income screens often look alike, even when the branding is different. Let me answer the big when question in the most honest way possible. There is no official schedule to circle on a calendar right now. If anything happens, you'll likely see it move through public steps: talk, proposal, bill language, votes, funding, then implementation. Until you see that chain, treat dates as speculation. And yes, I know that's not as satisfying as Friday at 2 p.m., but it's more accurate. And accurate is what you need when you're budgeting groceries and rent. Here's another scenario. If the economy takes a sharp downturn, leaders can accelerate relief outside of election timing. That's happened before. If consumer spending drops and layoffs rise, suddenly the urgency changes. That's why I say there are multiple triggers, not just politics. So, to summarize in plain language, if you receive Social Security benefits, your inclusion is most likely tied to income rules, not employment status. The IRS and Social Security systems already communicate through reporting, so "I'm invisible" is not a good assumption. And timing, if anything happens, will be driven by incentives and conditions. Now I want to hear from you. What benefit type are you on? Retirement, SSDI, SSI, survivor, spouse? And what's the biggest confusion you keep seeing online? Drop it below so I can address it in the next update. If you're new here, subscribe so you don't miss the next breakdown when real information arrives. And if you found clarity, please hit like for wins of thought. Those signals help this channel reach the people who need calm explanations the most. Share this with someone who's been stressed by rumors, because a simple framework can replace a week of worry. I'll keep watching for official moves, and when something concrete appears, I'll translate it into plain English immediately. Until then, take a breath, keep your info updated, and keep your questions coming. Thanks for being here, and I'll catch you in the next one.